There may be only one more significant crash for the Bitcoin and crypto market before we see the mania take off for the altcoin season. Now, I want to show you the data in today's video and also look at how this is playing its role across the rest of the markets, across Bitcoin, across Ethereum, and of course the altcoin markets. Now, we have some macro stuff to get through at the beginning of the video as well. So make sure you hit that like and subscribe button. It's your home of macro cycle analysis, covering the stock markets, Bitcoin, cryptos, real estate, you name it, we're covering it. Let's dive into today's video. We are seeing the masses go ballistic about the ETF news. Now, of course, we've had some info and some data looking at how it could all be wrong for the ETF. We still have a little bit of time to go as of right now, roughly 24, 36 hours. We'll continue to follow up on the particular announcements on the channel, but focus on the charts and of course the data as opposed to the emotional excitement about an ETF and how it could bring Bitcoin to $200,000. Remember this news outlet calling for a pump and then a dump on the ETF news from last week. Now they're calling for a 200K price target from an ETF announcement. This is the news. This is what they do. Stay away from the noise. But what we're trying to do is understand what the charts are telling us and hopefully give us some insights to what might occur next. So for the macro, we're looking at the S&P 500, the biggest stock market in the world. Now, the main thing I want to look at here is these data points forecasting for the entire year, looking at strategists, Wall Street strategists, the guys who get paid the big bucks, the multiple six figures, you call it big or small, whatever you want to do, multiple six figures here to determine what the market will do at the end of the year. So the whole year ahead. The table below shows us how the market performed after the years in which the strategists predicted the poorest performance in the coming year. This is all giving us a little bit of insight for the rest of this year. So the strategists predicted that the S&P 500 would perform the poorest in these red dots. Now, that just means if they said the following year is going to be bad, that's what they were anticipating. What did that following year do? So 1999, they estimated a negative 6.6% return for the S&P 500. They were right. They got that first year right. But this is a really interesting point moving forward now because of what strategists do, analysts, you name it, media, so on. They continue to call negative times ahead. 2003, did it go down? No. They called it again. 2004, no. You can see the chart going up and they were calling the following year to collapse. They were calling the next year to collapse, or at least have a bad year, nothing like the previous year. And it continued to go up. Then they called again in 2008, 2009, 2010, 11, 12, and 13. Here are your red dots on the chart. There, and the market basically has skyrocketed from that point. We can go all the way into 2019, 21, and now the recent one is 2023. Essentially, they are just expecting, they're estimating that the S&P is not going to do very well. So we can see that out of the 12 signals, they got 2 right. Absolutely extremely poor performance here from the Wall Street strategists. And basically they got 2021 right at the peak here. Well, 2022 was down and they got 1999, okay, and down. So the lesson from this is that eventually a broken clock is going to be right twice a day. Well, we've got it almost to the exact data points. You got 12 digits on your watch. They got it right twice. There is your answer. The majority of the time when these markets are being called depressing and crashes and collapses and recessions, the markets are going up from that point. So that brings us into the overall cycle, the real estate cycle, our 18.6 year cycle. We're roughly around here now, 2023 into 2024. And we have these final couple of years coming up for the big winner's curse, the big movement in the markets where everything goes even more ballistic, or at least that's my interpretation of the data over 200 years here. So this is what this is based on, over 200 years of US home price data. So that's where we sit in the overall cycle. We know that the masses, the Wall Street strategists, are typically wrong most of the time, and the market's going up. Meanwhile, they're trying to tell us that the market's going to collapse every year. Now, in the short term, the S&P 500 has had a significant pullback in this first week of trading for 2024. Overnight, we just had a nice big pump back up. But remember, we're still underneath the previous all-time high, and we had a significant move to the downside of 1, 2, 3, 4, 5 straight days down of lower highs and lower lows, regardless of the color. So now we had a nice big push to the upside. Is that enough? Obviously, the market will let us know. But the main thing that we've been talking about, at least for the first half of 2024, is things might be a little bit unpredictable. They might be a little bit more difficult to forecast compared to what I think is coming up in the later half of 2024, 2025, maybe even into 2026 as well. So with that in mind, we have a market just in a trading range for now, which leads us over to Bitcoin and the possibility of there being one more crash that could hopefully prepare the rest of the degens out there, the crypto millionaires or hopeful millionaires, for their positions into that stage of the markets going ballistic. So all I've done here is go through some more data points, as we do in each video, to uncover what the macro is doing, what the traditional markets are doing. In this case, the S&P 500. We're looking at the real estate cycle and seeing where the market is up to in relation to that macro cycle. The reason for that is we want to see more risk coming into the markets, more investors and traders being hopeful that their money is going to make them absolutely rich. Bitcoin's currently sitting around $47,000, coming very close to the monthly swing top at $48,000. So about 2% away from that first lower monthly swing top, a very important price for Bitcoin to overcome. The next price above that was a weekly swing top, roughly sitting at about 50 to 52K. So it's about 6% away from where the current price is. So some pretty good resistance levels ahead. If it can overcome it, then we can reassess. But for now, we still sit underneath those levels and trading between the 50% level here, so at 42,200, and those top levels at $48,000. So is there still a possibility for a correction? Well, of course there is, but the trend is up. So if you're trading the markets on a short term, well, then you just continue to trade. Now let's turn our attention to the data. We want to have a look specifically at what happens to Bitcoin in January. Now this is something brand new that we're building out at the Investor Accelerator. When it is ready to be released, we'll notify you guys. So make sure you are on the free report email list. Link is in the top of the video description. It can do absolutely crazy cool stuff here. We can turn years off, particular years that we don't want to use because they might have been bearish years, and we don't think this particular year is a bear year. We could turn off other years that might not relate to the data set that we want to produce here, and you can turn them back on. The main thing we're looking at here is what happens in January. Well, we've got 10 data points, 7 wins, 3 losses, giving us 70% win rate. The main thing we're looking at here is that there is a higher chance that January could be green. How much green? That's going to come down to the end of the month. So that's a really cool addition that we will have out very soon. Make sure you are subscribed to the email list. Link is in the top of the video description. It also goes through semi-annually and annually, which we are continuing to build out as well. This is the stuff that you see me do at the end of the month to determine what the forward returns for Bitcoin could be over that coming 6 to 12 months. So let's get on with the last crash that Bitcoin could potentially go through. Now, the idea here is that we're looking at timeframes that Bitcoin has had pullbacks at what stage in the cycle. Now, what got me onto this was a fantastic video that Michael did 24 hours ago, basically yesterday, looking at the pullbacks on Bitcoin through each of the cycles. Now, what I noticed with the pullbacks here is there was roughly 7, well, there was in these cases, 7 pullbacks in each of the previous 3 cycles. What I wanted to do was go one step further, or I guess add to it, and just look at where are we right now? Are we potentially at that 5th pullback? And if so, where is that 5th pullback in the cycle itself? Does that occur above the all-time high? Does it occur below the old all-time high? And then what happens after that point? That's what I think gets super, super interesting. But if you want to go into far more detail with each of the pullbacks, the largest, the shortest, the average here, for when that does occur or if it occurs, then I highly suggest going to check out Michael's video from yesterday. I'll leave a link to his channel in the video description. On the topic of this last pullback, Bitcoin is now up 120 days from the September low. That September low caught a lot off guard. It was at 24,900 being the absolute low, when many thought this market was going to run down to 20K, take out 15K. That was an extreme, fearful time for the markets. And of course, what's happened from there? Well, Bitcoin's up 90%, $22,400. It's up for 119 days straight. Absolutely crazy. What I've also done on the channel is look at this as being a potential distribution phase on the shorter term timeframes, which I'll also update in the coming days once we get a little more data. Because right now, Bitcoin has pushed through to $47,000 after we were looking at the previous top potentially being an upthrust after distribution. Could this be another upthrust after distribution? I want to follow up with that on the channel in the coming days as well. And looking at that one last crash or correction or drop, whatever you want to call it for Bitcoin and crypto markets, I've got the MVRV score here. So just looking at where Bitcoin has been positioned over the last couple of cycles. Throughout these lows, the price underneath 25K, when Bitcoin was under these levels through June of 2022, then November 2022, March 2023, we had some pretty good buying opportunities as Bitcoin dropped into the green zone. And that green zone was the buy zone. So we were talking about for a long time, because eventually it moves out of the buying zone, out of this green zone, and typically does not come back into the green zone, barring an absolutely catastrophic event of some sort of pandemic. Now, I'm not gambling on that happening again. As I've mentioned many times before, you can't predict these black swan events and how severe they will be. So we're not going to try and do that. We just want to continue to have a look at the probabilities and the unlikely nature of Bitcoin dropping back into this particular buy zone, however, giving us a potential correction and where that might come. So what we're looking at was the MVRV score just running up, and then if there was a correction, basically coming back somewhere at around the half point, so 0.5 on this particular score after it runs past 0.7 to 1. Now, if that's the case, we're currently sitting at 0.6 and we haven't really gone much higher. If we throw a line up at around half, so 0.5, we can see in past cycles that it's gone just past it, dipped slightly under, and then that's the end of the accumulation stage. Now, if I just bring this back down to where the previous resistance came back under, found it as support, well, that brings us back down to about 0.26. So potentially somewhere around that 0.2 to 0.5 area for a pullback on the MVRV could be a reasonable area for reaccumulation on BTC. But of course, the best opportunities were all the way back here. So with that in mind, then you must keep your money management and risk management under control. You don't want to load up more here than what you did back at the lows, if in fact you got in at the lows, because that would then topple your portfolio if the market was to come back down. This is trying to play the game like the professionals and not get yourself worked up into a massive position too high up compared to where the market has come from. Now, going back to these corrections for the cycles, we are currently sitting at the possibility of a fifth correction. Each of the previous cycles have had 7 corrections, and Michael's done a fantastic job here bringing pulling the data out and looking at the largest corrections of those particular cycles. Now, a lot of times we've referred to this cycle, the fourth cycle, being similar to the second cycle. Remember, this is all probabilities, just it looks similar. It might not be exactly the same. And if this is the case, well, the largest in that cycle in 2016, 2017 was 90 days. So that was the largest pullback that it had. So far, we've had 2 60-day pullbacks. Shortest here has been 13. Our shortest has been 16. Average of 45, average of 40. So these two have been the most similar in any of the previous cycles. So we'll keep that in mind should we see another correction. Now, we're potentially at this fifth correction. And what I was looking at was, where do these corrections occur? 1, 2, 3, 4, 5, 71 is the pullback here. This occurred underneath a previous top, and then the market went ballistic as well. And there was 2 more corrections after that point. Now, cycle 2, here is your top, 15, was the 5th. There's 1, 2, 3, 4, 5. And then the market breaks out into a new all-time high, goes crazy, or at least the mayhem comes in and the sentiment goes crazy. And you had 2 more significant pullbacks in that period. At cycle 2, then cycle 3, we have 1, 2, 3, 4, 5. Market breaks out, goes crazy, the sentiment picks up, everything goes ballistic. And then there are 2 more significant pullbacks before the peak comes in and market collapses from that point. Now we're at our 4th pullback, 16 days, 22, 62, 60. Maybe this is our last pullback underneath the old all-time high, which would line up with where we currently sit in the overall cycle here, with how much time we have left until the breakout into new all-time highs. You know, we've looked at that potentially being around October, November of 2024, which lines up with the presidential cycle, and also the other 2 cycles where the Bitcoin took roughly 23 to 24 months to break out into new all-time highs. So that would put us out, if we're looking at 24 months from the cycle low, to November of 2024. We look at 23 months, that is going to put us to October of 2024, which also lines up with 35 months from the old all-time high, or the current all-time high, before Bitcoin breaks out into another new all-time high. So many of these timing points are lining up with that breakout point in the second half of 2024. This could be that final correction. If there is a correction, I suspect there will be, but at the end of the day, the charts are going to tell us what they tell us. I'm not calling anything that it must happen. There is never a guarantee. We are looking at the possibility of there being one final significant correction before the new all-time high, which I think might come in late 2024. Now, if that wasn't enough, we've got an update for Ethereum. It looks like we are now on the verge of breaking down from the USD low, like what happened in the previous cycle. Ethereum lowered in December of 2018, and then it lowered in June of 2022. And we're about to break down on the ETH BTC chart. So that is pretty much putting in the final basing, or at least that's what happened last time, before we get that final accumulation, that final crash, that final correction, and then things start to get a little bit more rosy as we head into that second half of 2024. So far, everything is lining up reasonably well with the timing. And the one big thing that's been pushing up harder than, you insert your own analogy there, is BTC hitting 47,300 bucks on most exchanges. Let's continue to follow up with this and how it unfolds over the coming days, especially with the ETF coming out. I'll see you guys back here at the next video, so stay tuned, like and subscribe, share it with a friend on our journey to 400,000 in 2024. And to the folks who don't want to share it with their friends because they don't want to let the secret out, go on, give it a crack, see what your friends say, and you have something to chat about with them. Thanks again. I'll see you at the next one. Till then, take care and peace out.